talk. All right, we'll get started here in 1 second.
How did it get to be 6 already? Hi, and welcome everybody. My name is Tracy Irby, and I'm the director at the Center for Women Entrepreneurs. Welcome everyone, especially all of you that are new tonight. We also have Lisa Stinyard on. She is our program director. For those of you that aren't familiar with the Center for Women Entrepreneurs, we were funded by the state legislature in 2015 just to help promote women entrepreneurs anywhere in the state of Texas. And we do that through small business advising, funding, like the Start Her grant, networking and training events, and then we also do research into women in business, women entrepreneurs, etc. We are part of the larger Jane Nelson Institute for Women's Leadership, which also includes the Center for Women in Politics and Public Policy and the Center for Student Leadership. So we welcome everybody tonight, those, and again, especially those of you that are new. Tonight's topic is a real special one that is really important to everybody in business. It's not always everyone's favorite, but it's one of the most necessary ones that we need. So I'm really happy to tell you about our speaker tonight. It is Nancy Stuhlmuller. Nancy is a native New Yorker living in Texas for 25 years now. She is an elite certified QuickBooks Online Pro advisor and a credit-trained banker. Nancy has owned NSH Bookkeeping and Consulting, LLC, for over 14 years now. Previously, she was a vice president of commercial lending. Nancy has managed a loan portfolio in excess of $300 million in commitment. This training in bank underwriting, legal negotiations, and contract documentation has served her well in her current tool basket of skills for running her business. Nancy has a servant's heart and serves on numerous nonprofit boards and is an avid Aggie mom. Her greatest joy in life is her family, her husband, John, and Aggie sons, Andrew and Peter. Hiking in the mountains or kayaking in a lake is her happy place. So I'm happy to introduce our speaker for tonight. Nancy, we'll be turning it over to you now.
Okay, I'm happy to meet everybody. Donna Lisa will be handling the slide presentation. You can probably see from my background, that is my happy place, hiking and kayaking. So I just want to say thank you to everybody for joining. I will do my best to try to speak a little slower so you can understand me with my accent. I put this presentation together, and I mean, we've got about an hour 15 minutes together. So it's going to basically touch on the topics. And I think as we're going along, we can take questions. So at particular junctures in time, so I'm happy to help. If there's something that's going to get a bit more detailed, we can take it offline, and feel free to reach out to me after this. My contact information will be at the end. You can LinkedIn me, shoot me an email, give me a phone call. Email is my preferred method of communication. So looking forward to kind of going through the material, and we can go on next to look at the agenda. So the basic topics will be basic bookkeeping overview, business tracking options, setting yourself up for success, and understanding accounts and financial statements. Now, I know that these topics can be really pretty dry, so I will do my best to not have it be dry, but they're really important because you want to be able to understand this information to help you run your business. So now we'll just take kind of a look at the basic bookkeeping overview. In its simplest form, I mean, what do you have to do, I mean, to be successful? And with that, I put 4 key takeaways from this presentation. 1, set your business up to succeed from the start. Establish a bookkeeping system. Establish relationships with key business partners, bankers, accountants, lawyers, the staff at TWU, SCORE. There's lots of different people out there that will be your business partners. Don't be shy about making those connections because it's very important to do that. Number 2, select a bookkeeping system from day 1 and keep it current. Don't put your head in the sand. I mean, it's like pick a system and stay with it. And we'll talk later about that in terms of like what your daily or weekly task could be, but make sure that you pick one and don't be like, I'll just get to it, or I'll just use the shoebox. Number 3, understanding what financial statements are and what they're not. I'm not sure if most people, I assume most of you understand the concept of financial statements, but we will go over the 3 main financial statements that you need to use to run your business, and also that outside parties, especially if you're looking for funding from lending sources, will need to see financial statements. And last but not least, don't be afraid of these reports, these statements. They are your friends. This information is, you know, what you need to help you run your business and interface with the outside world. So in its simplest form, what exactly is bookkeeping? It's the act of recording every financial transaction. You're basically tracking money coming in and money going out. Some people actually are doing bartering in their system. If you are bartering, that's, you know, that's something that's kind of offline, but you want to be tracking everything that you've got going out and everything that you've got coming in. And that's the simplest form. So the business tracking options are where we start to get into the meat of it. And most people have bank accounts established already. So you're going to use your bank account statements to help you keep track of it. People also typically can have credit cards. I do want to make a point that it's very common, I did it myself in the beginning of my business, to have like one checking account or one credit card that might have started out as a personal account. But I strongly encourage you to establish business-only accounts, a business-only checking account, a business-only credit card, possibly a business-only savings account, because the more that you have the expenses delineated, the less you're mixing personal in with the business expenses. Now, you might not be able to establish those accounts right away in the business name if there's not enough credit there to do that. So you'll have to use your personal accounts, but it's extremely important if you are using your personal accounts that you are keeping track, literally line by line, what's a personal expense versus what's a business expense. And people typically do that a couple of different ways. Some people just print out their statement every month, and they literally, like, next to each charge, they'll write business, personal, business, personal. Some people will take their statement and then drop it into an Excel, and they'll just use that and mark if it's business or personal there. Because you can only take your business expenses in your business records in terms of, or actually income that's coming into your account. You can only show your business income or your business expenses in the business. You shouldn't be showing any of your personal expenses. Personal expenses will be coded separately, and that we can discuss later. So on top of the bank accounts and credit cards, we talked about the Excel spreadsheets. Shoebox accounting method for receipt collection. People are still doing that. My own sister-in-law still does that. And I myself am not too great with receipts, but I do have a receipt capture system. But it's extremely important for you to be able to have your receipts to show the IRS, if you ever were to get audited, that you can say, hey, this is a legitimate business expense, and here's my receipt for it. Having the supporting documentation is one of the best things that you can do. The other method of receipt collection is not one that I endorse, but it's used continuously by my husband. He just decides to take all of his receipts, and he takes them and he puts them in the center console of the car. It could be my car or his car. And then 4 or 5 months in, he'll go in, he'll grab all the receipts out of the center console, he crumples them up. I know everyone's laughing. I don't know if anyone else had this happen. Then I'm here in my home office. He goes right there to my inbox and pops them into my inbox. And I'm like, you seriously think I'm supposed to be going through all this stuff and figure out what's for the business and what's not? Even though he's using it, it's not one that I recommend. So try to get with a better system, either literally just keeping track of your expenses in like a file folder, or there are so many softwares out there that are not that expensive to be able to do receipt capture either by email or by picture. And if you use QuickBooks Online, you actually get that feature for free. So that kind of leads to using a bookkeeping software to incorporate all of the above, which will take us to our next slide. Now, I'm not sure, I mean, it's hard, I think the volume's off for everybody, but there's lots of different bookkeeping softwares out there. By far, the one that is the most popular in terms of well known and most popular in terms of use is QuickBooks. QuickBooks is also known as Intuit because they are owned by Intuit, which also owns tax software, MailChimp, and a bunch of other things. Other software choices include Xero, which is an online platform, which is competitive somewhat to QuickBooks. FreshBooks is a online software as well. And there are other softwares out there. These are by far the best known ones. There are some payroll companies out there. For example, Patriot Payroll, it's a service, like you've got ADP, there's Paychex, Paycom, there's so many different payroll providers out there. One of them is called Patriot Software, and they actually offer you accounting software as well as payroll software. That kind of leads me to the next point, because when you pick a software, it's really important to decide a couple of things. Am I going to go desktop? Do I just want to buy a license and install that software either on my laptop or on my desktop computer? Or am I going to use an online subscription, which means you have a monthly fee for that subscription? If you choose to use a desktop version, it's really important that you back up your file. Now, there are different ways that you can do that. Through an external server, through services that go in and do it for you, but you've got to make sure that you back up your file. The other thing is, depending on what type of business you have, it makes the decision, it helps kind of determine the software that you pick. So if you have an inventory-based business where you're purchasing things, you've got cost of goods sold, you're carrying inventory, you need to make sure you pick a software that can handle inventory. Some of them can't, so that's an important thing to think about. If you're a service-based business and you're providing like professional services, if you'd like an accounting, cybersecurity person, if you're doing services and not providing any like hard goods, you can pretty much decide then, do I want to use desktop or software? Because you're not really hamstrung by inventory. The other thing is you want to make sure that you have a software that can grow with your business. I myself specialize in QuickBooks Online. I used to use desktop, but the ecosystem and the world is gravitating towards online subscriptions. And with desktop, you then have to figure out not only the backup, but who's accessing your books. So if you're going to have anybody else working in your bookkeeping file other than yourself, whether it's a business partner, an employee, your accountant who wants to see your books to do your taxes, they're going to have access to it. If you have an online subscription for software, they will have easier access real time to get into those books to look at what they need to look at. If you have a desktop software, you need to then have an app or a function that's going to enable those people to be able to access your desktop software. Unless you want to go really old school in terms of backing up the file, sending a copy to whoever it is that needs to look at it, not working in your file while they're working at it, then when they're done with what they need to do, they send you the file back and you need then to upload that file. So typically when people are starting out, you don't kind of go for the whole bell and whistle system. You kind of go for like what you need now, but make sure that whatever you pick can scale with you and that it's secure. You definitely need to make sure that it's secure, especially in light of things being hacked and encryption. You do not want anybody getting into your file, double authentication as well. So, and the other thing, like I had touched on, is no matter what you pick, make sure you figure out what the role definition is, because transparency and an audit trail is super important. If you want to make sure that you know what's being done and when it's being done and by who it's being done, you want to make sure that you have an audit trail in your accounting software. I myself, a few years back, oh geez, I probably worked on 2 or 3 files where people were being embezzled from. I mean, literally somebody had a home office and they had a pool business and a pool servicing business, and they had a friend of the family literally sitting at the next table over from them in their home office, and they were working on the file. And because the owner was just so busy, you know, building the business and working the business, he wasn't paying attention. And turns out the person next to him stole like $30,000, $40,000 from him. So by the time he figured out what was going on, she had already like resigned. And then it was a question of, do I go after this person? Can I prosecute them? So it's really important that you know who's doing what, and you can actually look at that trail and see what's done. And like, especially if it's just you, you're obviously doing everything. If you've got someone else and you got someone, say, making deposits for your business, don't have that person then be reconciling your account. You need a third party to make sure that when you're reconciling your accounts every month, you know, that person's looking, saying, okay, here's what the bank's showing, here's what your accounting records is showing. More times than not, they're going to match up. But if for some reason something's not matching up, then you got to figure out why. So you don't want the same person like invoicing, collecting, writing checks, you know, reconciling those books. You need a division of duties. Again, that's if you have more than just yourself working on it. So kind of just food for thought. But I myself, though, I mean, I am, I guess, kind of endorsing QuickBooks Online because it is encrypted. It's user-friendly. There are different price points, and your accountant and your bookkeeper and you can have different accesses and different levels of access. So it goes with you wherever you go, as well as the other online. So like if you're doing work from a tablet, or you want to work through an app, or you want to work through your phone, you don't need to be at a computer if you're using an online software. So it's kind of important that you really make the best decision you can for the software that you want to use. I think I kind of talked that to death.
So Nancy, before we move to the next slide, Doris had a question when we were talking about bookkeeping options. She wanted to know if taking pictures of them and then like creating a Word document with all of her receipts, if that was a good option.
Yeah, I mean, you can, I mean, depending on like what software she has. So if you have, typically when you're taking a picture of the receipt, you typically then want to attach that picture in your accounting software. So like if you've got a bank fee coming in, so say you're banking with Bank of America and you've got a checking account with them and a credit card with them. When you're charging something on the credit card, you're going to have that receipt. So if you take a picture of that receipt, there are features that you can choose if you want to email that receipt over, or if you just want to send that picture over. And then when you connect the third-party app, when you connect the receipt app into your QuickBook file or whatever software you choose, that literally then behind the scenes will bring that receipt in, and that receipt will live in the body of your software. And you can also then attach that receipt to the particular line item on your credit card or on your bank statement.
Yeah,
So
it sounds more like Nancy that she doesn't have a software, and so she's trying to just like create her own. So she was talking about just taking pictures of receipts and creating it inside of a Word document.
yeah, sure, you can do that. The thing is, I just don't know, you can absolutely do that. And then you will have a soft copy of all the receipts in a Word document. So I don't know then if you're going to try to say maybe have like 2 or 3 receipts on one Word document, or if you're going to keep like adding pages or tabs to the Word document for the receipt.
She
So
was saying her receipts fade over time. So I guess this was her way of
right.
keeping them safe.
Oh yeah, for sure. For sure. Or even like if you take a picture of it, if you've got like a cloud storage, you know, that's another way of having the picture. If you have like, I don't know, I mean, Amazon or any of these cloud storages or any type of picture, even photo storage might be able to do it, but you could absolutely do it on a Word document. I would just figure out how you're going to organize your Word document so it doesn't get too voluminous, but you can do that for sure. And just last note on that, like sometimes with the receipts, people like to write on the receipt before they take the picture. You know, like if there's a particular reason what it was bought for, if it's a billable expense for a client, that's pretty popular. Like if you have expenses that are tagged to certain clients that you have to bill for, they'll write it on that. Or for meals, if you have a meal with a client or a prospect or a referral, to be able to deduct that meal from your business taxes, you need to substantiate that it's a business meal. So it might not be a bad idea to just like write on there, hey, I met with Joe Smith and we talked about, and then you have the receipt and that can substantiate your deduction. Point to note, I'm not a CPA, not giving tax advice, but I do try to help my clients with what I try to keep up on what's going on. For this year, for 2021 and 2022, any business meals that take place are now 100% tax deductible through your business. And that's a really big deal because it had been 50%, but because of all the stimulus and the COVID stimulus plans that are out there, these business meals are 100% deductible. So keeping that receipt and notating who it was with would be great, because then if it does come down to an audit, you can just have a copy of it, you know, the picture copy or however you're storing it, and just say, yep, I met with this person, we talked about business. And 100% of that's deductible from your business, you know, your business expenses. So setting yourself up for success. On to the next slide, which is kind of a roadmap that I put out there. Did I miss the roadmap? Okay. Did we? Oh, there we go. So I kind of thought a roadmap, a visual would be helpful. I mean, we talked about step 1, selecting the bookkeeping software. We talked about 2, establishing dedicated business checking accounts and credit cards. Number 3, inputting transactions daily or weekly. Figuring out the timing and the cadence of this is something that you kind of have to figure out what makes sense for your business and then try to stick to it. I don't recommend trying to input everything on a monthly basis. So if you've got a software that you're using, and I would suspect most of you do, but if you're using a software, you should be able to connect your bank accounts into your software. And then if you connect them online, all that information from the bank will pull into your software, typically on a daily basis. Most banks pull it in daily. So you'll have those transactions sitting there in your accounting records, and then you're able to like notate things on there and add them to your accounts. You can add that to your checking account if it went through there. You can add it to your savings account, or you can add those charges to your credit card if they went through. So depending on how busy your business is, inputting it daily, especially like if you're in a business where you've got a lot of foot traffic, if you're doing Square, you're doing sales receipts, you've got stuff coming in every day, you've got to settle up at the end of the night. You're going to want to make sure you know that this stuff is settling. You know, when you're settling up with all this, you want to make sure the money's coming in. So you're probably going to want to look at that daily. For other businesses that may not be as active, that invoice and sell on receivables, so they're going to invoice a client, it may be on 30 days, that invoice is going to be out there, they may not be collecting money every day, they may not have expenses every day. You could probably look at your transactions weekly. But I think it's just really important, based on what your business is, that you pick a cadence and you stick to it. The 4th step, which is really important, is that all of your accounts need to be reconciled every single month. And when I say reconcile, it's taking all of your records that you have in your accounting system, in your bookkeeping system, and then reconciling it against the actual statements on your accounts, on all of your bank accounts, on all of your credit cards, on any of your loan accounts. So most statements typically cut like month by month. So it'd be like right now, November 30th would be the end of the month for most statements. Sometimes credit cards, like they have a different schedule. So you just want to reconcile your beginning balance in your account and your ending balance. And then you account for all of the money that came into those accounts and all of the money that went out. So oh, it's 2021. I see the question. It's for the meals expense, it's 2021 and 2022. And there are quite a few other things out there in terms of CPH, but it's really important that you reconcile your accounts. So the other thing that not everybody takes a look at is looking at your loan account. So if you have a loan from a bank or you have a loan from somebody else, it's a note payable or a loan payable on your books, that needs to be reconciled as well. And particularly important to note that when you make a payment on a loan, that payment typically is split between interest expense and principal repayment. Just like a mortgage, right? You're paying off part of the principal on the mortgage and you're paying off interest on the mortgage. You need to split that out because your interest account, your interest expense is a deductible business expense. So you want to make sure that you're capturing everything that you're spending on interest. And then also, as you reconcile the loan amount, you want to make sure that you're showing what you actually owe and that you're not overstating what you actually owe. So if nothing else from this screen, take away number 4, you have to reconcile your accounts. And these I just kind of touched on briefly before, understanding key partners and their roles, So like a bookkeeper, we talked about that. A bookkeeper typically performs the necessary prep work needed to allow your accountant to prepare your taxes. A point to be noted, some bookkeepers do prepare tax returns. And there is a role out there, I'm not sure if everybody's familiar with it, called an EA, an enrolled agent. An enrolled agent is somebody who's taken these very specific classes on tax preparation and current tax code, and they then are certified to be able to prepare tax returns. I'm not a CPA, I work with CPAs. There's a role for the bookkeeper, there's a role for the accountant CPA. I personally don't recommend having a bookkeeper who's not a tax person prepare your taxes, because there's so many nuances to taxes. And there's, especially this year with everything going on with all of the stimulus programs out there, you want to make sure you're working with somebody that's current on all those rules, so you can not just maximize your deductions, but optimize your income and make sure you're using all the advantages that are out there. So I would just really encourage you to get your taxes done by somebody who does taxes for a living. The accountant we talked about, they typically prepare your tax returns, and they also provide tax strategy. Tax strategy is really important to help you in terms of figuring out, not just what your taxes might be, your tax burden for your business, but figuring out ways to minimize your tax burden by whatever entity selection you have for your business, whether you're like a single member LLC or a sole proprietor, which flows through to your Schedule C on your personal tax return, or they can help you with, hey, should I be a partnership? Should I be an S Corp? So they can work with you on that. Last and certainly not least are your other key partners that we talked about, your banker, SCORE, TWU. Obviously, you're all familiar with TWU and the Center for Women Entrepreneurs. The Jane Nelson Institute for Women's Leadership, which just is a fabulous program, and you've got two wonderful people that are running it. So thank you to those ladies. And SCORE, I'm not sure if you're familiar with SCORE. It's run by the government. It's a free service that's offered. It's literally throughout the country, and each region has their own SCORE unit. So I believe there's one for Dallas, there's one for Fort Worth. And what it is, it's resources that are offered to you in terms of classes, information that you can access from them, but they also provide mentorship. So there are typically retired business professionals that volunteer for SCORE. And if you say, hey, I really need a business mentor, I really need to figure out my restaurant business and how I can market it and stuff. If you access your local SCORE chapter, wherever you're living, they will then assign you a mentor, and that person then will work with you on a one-on-one basis to help mentor you with your business and what it is that you're looking to achieve. And then if you have other needs that mentor can't do for you, they'll then refer you out to other people that can work with you. So it's a valuable resource that's out there that you just need to be aware of so you can go and tap it.
Nancy, we do have a couple of questions in the chat. So the first one from Mel, she says, if I buy inventory or do market research outside like malls, trade fairs, can I write off any meals?
If you're, to my understanding, if you're meeting with somebody, or if it's a business meal and you're attending something, if you're having a meal during a business day and it's business related, yes.
And then we had, Chantel asked, do you have any recommendations for small business tax prep? I'm not sure, if you're looking for somebody specifically, Chantel, is that what you're looking for? Yes, anybody specific?
Yeah, in a public forum, I don't really necessarily want to recommend anybody. I have, that's kind of an interesting question. So I have recommended people, and I do have a couple of people that I've worked with for years. Um, it's kind of a little bit of a slippery slope because you do want to recommend people, but then prices are so different. And then sometimes it's kind of like be careful of the good deed. So like I can say, I've worked with these 5 firms, and these firms are kind of at a higher level, so their price point's going to be a lot higher. And yet there's other people out there who are kind of single practitioners, and their price point is typically less expensive. So it kind of depends on what you're looking for. I mean, I do know a couple of people that I've worked with that I would recommend, but so if anybody wants to email me separately, I would be happy to share that information with them. I mean, I know people that go to like H&R Block and use that for their business taxes, but I think the important thing to also note is depending on what your tax form is. So I would think that a lot of us are like starting out, you're typically a sole proprietor or a single member LLC. So you're not going to have a separate business tax return because all of your business expenses and income will flow through your personal taxes on the Schedule C. And this is kind of like where things can get a little complicated, picking your entity structure. But if you are, say, an S Corp where you need at least 2 members, an S Corp, then you have greater liability protection, but you still flow through to your personal taxes on the Schedule C, but you need a business tax return. If you're a partnership, you need a business tax return and a personal tax return. If you're a C Corp, that's a whole nother animal. So I guess depending on whatever your structure is, will also determine on what tax returns that you need. And some people don't necessarily do business tax returns, they just do personal tax returns. So that's something kind of just to think about when you're interviewing tax people. And the other thing is, okay, tomorrow's December. Once January 1 comes, it's wheels off for everybody because we're all working on 1099s, we're working on getting ready for tax prep. So if anybody is thinking about trying to find an accountant to do taxes or switch accountants, I would strongly encourage you to be shopping now. Strongly encourage you to be shopping now and try to interview some people or vet some people now, because if you wait until January when everybody's in the weeds, from January to April, you're probably not going to get a whole lot of attention.
Thank you. That was all we had in the chat, Nancy.
Okay. All right. Then we can move on to the next slide, which is, okay, understanding the accounts and the financial statements. Okay, I'll try to keep everybody awake. So I'm going to demystify the terminology. Don't be afraid. Assets, liabilities, owner's equity, income, expenses. These are the words. This is the meat of the financial statements. So just be familiar with the names and what they mean, and then it all comes together in the financial statements. So we are going to move on to the next slide and kind of demystify what these mean. Bookkeeping based, these are the crux of everything. So, I mean, I'm guessing pretty much most everybody has kind of a concept of what these are, or a very good knowledge of what they are. Assets, what are assets? Assets can be current or long-term. Your assets, your liabilities, and your owner's equity are all part of your balance sheet. Your income and expenses are all part of your profit and loss statement, which is also known as your income statement. But when we start with assets, it's typically everybody's favorite because it's cash, and AR is accounts receivable. And if you have an inventory business, inventory, and fixed assets. So assets are what you own, cash that you've got in the bank, cash in your savings account. Accounts receivable, you've sold products, you've sold services to clients, to customers, and now you have accounts receivable on the books. They owe you that money. You sold them $500 of a service. You now have $500 coming to you for that service that you performed. That's an account receivable. Inventory. Even if, well, if you're a service business, you're going to buy things for your business, but that's going to mostly be an operating expense. If you're an inventory business, if you're a retailer and you've got a brick and mortar shop, you're carrying inventory. If you're an online retailer and you don't have a brick and mortar shop, but you're selling clothes and accessories or whatever it is that you're selling, you have inventory. So you need to be able to track that inventory, what you're buying and what you're holding. And then once you sell that, it moves out of inventory and it moves into a sale. So you need to make sure at any point in time, you know what your inventory is if you carry it and how it's comprised. And then assets, fixed assets. Fixed assets can be lots of different things. They can be buildings. They can be vehicles. They can be machinery and equipment. I mean, if you're out there and you're making, I've got somebody that makes window treatments and does stuff like that, right? So she has equipment so she can actually make it. So all of that is going to be fixed assets. So those are assets that you own. Liabilities is basically what you owe. It's money that you owe out. AP are accounts payable. So if you buy something like on a debit card, it comes right out of your checking account. That's just right off the bat, it's an expense. It's coming right out of your account. If you buy something from a vendor and you've got terms, so say I go out and I just bought like a piece of equipment for my business and I'm, you know, or not a piece of equipment. I went out and I bought something for my business and I have 30-day terms. So I received the product that I bought, but they said, hey, you don't need to pay for it for 30 days. So that's now an accounts payable. So I own the good, but I owe that money in 30 days. So you need to record that bill and you need to show that payable on your book. So you say, hey, this is how much I owe in this amount of time. And I mean, like utilities, a lot of people pay utilities. So the bills will come in and you input the bills and then they're out there. And then when you pay them, you take it off the payable. So it kind of helps to keep track of what you owe to your vendors. Credit cards are liabilities. They are considered current liabilities because they typically pay off within 30 days or at least within the year. You need to keep track of all the line item expenses on your credit cards. And then also when you pay off the credit cards, you need to record the payment. Loans, lots of different loans like we talked about. If you have bank loans out there, if you have a loan from a partner, or if you have a loan from somebody, I have a client who he has a buddy who gave him a $28,000 loan to go buy a food truck, right? So he has a note payable to his buddy to pay off the food truck. He's paying him off monthly. So any type of loans that you have there, you need to put on your liabilities. If those loans are due within a year, that's considered current. So you need to put that on the top part of your balance sheet as a current liability. If those loans are due in over a year, then you would consider that long-term. So you would put that in the long-term liability section of your balance sheet. Other liabilities that sometimes we don't always think about are sales tax and payroll tax. Sales tax is a liability. It should be a wash account. So like you're charging sales tax, if you're required to charge sales tax, you're collecting it, that's sitting there. Sales tax is not income. It's an important distinction to make. Sales tax is basically a flow-through account. If you're out there and you're charging something and you're collecting that sales tax, you're holding on to that money until you need to remit it to the state. So that's going to be considered a liability. And then when you pay that money to the state, then that liability goes away. So typically that's an account that should flush in and out either every month or every quarter, depending on what your sales tax filing cycle is. Sales
Nancy,
tax has gotten very, very tricky. So make sure that you find out if you're required to collect it and every jurisdiction that you're required to collect it in. Very, very tricky.
Nancy, we did have a question. So like our Start Her grant, like our grant winners, they received the money. They were wanting to know, is that considered, is that listed under assets or income?
So that's grant money that's not going to be repaid. So that would be other income and it would be below the operating line. So that money would, I mean, in terms of truly a journal entry, you would be debiting your cash because you're increasing your cash by that money. And then the offset credit would be to other income because that's money that doesn't repeat, but you have to show it as income. Good point. Yeah, that's why grants are great because you don't have to pay them back. It's like with grants like this, or like if you're going to school and you get grants, grants are awesome. Taxes on grants, I just see the question. That I would have to defer to a CPA on. I do not know. That's a good question. I don't know if that would be considered like imputed income. I mean, I'm gonna guess no, but you need to get with a CPA. I'm not sure if anybody here has even been in business long enough to qualify for any of the PPP, the Paycheck Protection Program funding. But that money, after like 8 different iterations from Congress, is now determined to be non-taxable, which is absolutely amazing because initially they wanted to tax it. And now literally, if you qualified for the money and you were able to get it forgiven, not only do you not have to pay it back, you don't have to pay any income tax on it. So it was an absolute windfall. Finishing up liabilities, we have the Ever Fund payroll tax. So if you have employees, and I mean W-2 employees, not contractors, not if you're pulling money out of the business as an owner's distribution. If you have actual employees that you need to, that you're paying wages to, that you're paying employee payroll taxes on, and state unemployment taxes on, you need to collect payroll tax for them. And it's the same concept as sales tax. The money washes in, the money washes out. So payroll tax that you're collecting, that you're on behalf of your employees, is a liability. And then you will need to determine what your reporting cycle is for payroll taxes. If you have to remit bi-weekly, monthly, quarterly, it all depends on your volume. So I would strongly suggest that if you do have payroll, you work with the payroll service that are the experts in this. The other section of the balance sheet is owner's equity. So all of your assets equal your liabilities plus your owner's equity. Owner's equity sometimes is a little tricky to understand, but basically what it is, it's all the money that you're investing in the business, that you're putting in yourself, is your owner's investment. And then if you're taking money out of the business, like if you're a single member LLC or a sole proprietor, and you're taking money out of the business to pay yourself, that's considered owner's pay or an owner's distribution. And then the difference, the retained earnings is the money that you're earning in the business that you've left in the business. So that is your net income that is carrying over every year. So say this year you have $500,000 in revenue, your actual net income is $50,000. That $50,000 that you retained in the business, that then increases your owner's equity. And the difference between the assets and the liabilities is your owner's equity. So if your assets are 500,000 and your liabilities are 300, your owner's equity is 200. So, okay, I see a question. I can't. From Mel, if I have a single member LLC, I'm sorry, Donna, can you read the whole question? It disappeared on me.
Yep, it says,
I
if
can-
I have a single member LLC, I will be taxed on the net income. However, if I have LLC with pass-through S-Corp, can I retain a portion of this income and this will not be taxed?
Okay, S corps are different. So the S corp rules are, in S corp, you have to take a W-2 salary. So an S corp, for people who may not, it's a entity status election that gives you more liability protection for the business, but still enables you to be able to pay personal taxes on your business income. So rather than be a C corp, which means it's a double taxation, you're paying taxes through your payroll as well as on the business. An S corp gives you better liability protection, but you're still paying taxes on a personal schedule, not on a business schedule. If you're an S corp, yeah, you have to take a market rate of a payroll for the service that you're providing. And then you are also then be able to pull money out of the business to pay your estimated taxes. So if you're an S corp and say like the market rate for your salaries, I mean, say you own a shop and the market rate for your salary would be $70,000 as a shop owner, you should be taking a W-2 salary of $70,000. And then through that, you're making your payroll taxes that you need to pay on that. But in addition to that, because you're also hopefully making more of a profit in the business, you will then have to pay income tax based on that profit, but it will be at your personal tax rate, not the corporate tax rate. So based on what the business is earning, you might be required to, yeah, the net income tax with the owner, what you're avoiding is the self-employment, correct. But you're able to pull money out to be able to pay for your estimated taxes. So it kind of covers you on both ends. I would say I've seen a lot of owners and S corps are pulling money out of the business that aren't necessarily related to business expenses or to cover estimated taxes. I don't think the IRS is too much of a fan of that. So if you are an S corp selection, I would definitely say talk to a tax preparer to make sure that you're doing everything properly. Any other questions on the confusing balance sheet? If not, we are going to move on to the most popular income statement, which is income and expenses. Income is any money that you're bringing into your business. Typically, it's sales, commissions, services. It can be, you can call it whatever it is that you want to call it. I mean, if you call, revenue, sales, services, whatever you want to call, it's income, money that's coming into your business from whatever you're providing. Now, income could definitely be commissions. Real estate agents, that most of their income is in commissions. It's not necessarily in sales. People that make commissions on other different products. I have somebody actually that sells life insurance policies. All of their income is coming into commissions through all the different insurance providers. The other side of income is expenses. So there are different categories of expenses, and it's kind of important that you make sure that you categorize your expenses correctly, so you know how your business is doing in terms of your sales, and if you're making money on your sales, and what you're spending to actually run your business. So under expenses, the first category I listed was cost of sales. That's a cost of goods sold. So whatever your business is, if you're a service business, chances are your cost of sales is going to be payroll. If you're like an architect and payroll is going to be, your expenses are who you're paying to do that work, that's going to be your cost of sales. And that's going to be important because then you're going to want to look at your gross profit margin. So if I'm selling something for this and it costs me this much to sell that product, what is my gross profit margin? Is my gross profit margin 10%? Is it 50%? Is it 100%? So it's important to be able to say, hey, I know how much it's costing me to get that sale in the door. If you are an inventory business, then your cost of sales will also be the inventory that you're purchasing. So if you're purchasing a widget for $5 and you're selling that widget for $15, well, then you now have a $10 gross profit margin. So you want to know what your gross profit margin is on all your different product lines, because some product lines are going to be way more profitable and some will be less profitable. And you'll need to know that so you know how to run your business. Because if you're putting all these resources into something and the profit margin's not there, there might be better ways for you to use your resources. A large group of the expenses are the operating expenses. That's like selling expenses, general expenses, administrative expenses, expenses that kind of cover across the board for your business, like supplies, insurance, utilities, marketing, social media. Those are all operating expenses. And then your other larger expenses can be payroll or contractor expenses. And by contractor, I typically mean a 1099 contractor, somebody who is not a W-2 employee, but you get their services. Typically, contractors will be like a bookkeeper, an accountant, a lawyer, or if you are using contractors to help provide your main business line, like for an architect, they may just have like one person on staff, but have 5 different contractors. That would be a contractor expense. So we can move on to the next one, which is kind of explains what the financial statements are. In their simplest form, financial statements are the key documents that assist you in determining the health of your business. The key thing is your bookkeeping records, everything that you've been doing up until now, tracking everything, the money in, the money out, reconciling it, making sure everything's good. All those records produce your financial statements. And the main financial statements we already touched on. It's the balance sheet, which represents a snapshot of your entire business at any point in time. It shows your company's net worth. So at any point in time, you'll say, I have this in cash, I have this in AR, I have this in payables, I have this in loans. At any point in time, you know exactly what your business looks like. The most favorite is the income statement, also known as the profit and loss. And that represents a snapshot of your operations during a period of time. So you can run your income statement by whatever metrics you want to look at to see how you're doing. You can look at it monthly, you can look at it quarterly, you can look at it year to date. And I like looking at it and comparing it to the prior period the same. So like if I'm looking at the first quarter of 2021, I want to see how it looks in the first quarter of 2020. Because then you can see trends there. You can see like, am I seasonal? You know, are my prices there? Am I losing business? Am I gaining business? How are my expenses? So you can pull these statements however you want to see how your business is doing over a period of time. This is like extremely important for businesses that are also seasonal. Because when I was a banker, I had a client who sold mostly holiday products. They sold like injected mold dye, like little plates, like plastic plates and all that stuff. And they had like holiday decorations like Halloween, Thanksgiving, Christmas, and Hanukkah. So for the first 9 months of the year, they were like buying stuff and, you know, getting all those plastic pellets, and they had people working and they were making stuff. So for the first 9 months of the year, they were losing money. Well, all their sales came in the last, you know, in the last 3 months of the year. So if you look at an income statement for those 3 months, the last 3 months of the year, you're going to say, oh my God, I'm like, you know, I'm in hog heaven because my sales are out the roof and my expenses are decent. So I'm making all this money. But if you pull the income statement for the first 9, you know, months of the year, it's like, whoa, I don't have any sales and my expenses are crazy. So you have to look at it for the whole year. But so knowing what your business is will also help you decide how you need to look at your income statement to see how you're doing. Same concept for the cash flow statement. It's a snapshot of your cash inflows and outflows during a period of time. So it's the same thing. You want to look at how you're doing over what period of time and what money's coming in and what money's going out. And we'll get into real examples of these. We can go to the next one. So full disclosure, For any of you who are familiar with QuickBooks, and this is for QuickBooks Online, this profit and loss statement, Craig's Design and Landscaping Service, profit and loss, is taken out of the sample file from the QuickBook file. So I didn't create this. This is out there for public use. So if anybody has a QuickBook file, Craig's Design and Landscaping Services is, I think, built into every single file. So that's where I got this from. And it's, you know, if you need to like play with it and pull it and then kind of compare it to this, you're welcome to do that. So in this particular account, this is a good example of a profit and loss for, obviously he does design and landscaping. So for this period of time, you can see that his income came in from design income of like $22.50. He had landscaping services, and then he had job materials. So you're able to see all the different line items based on what his business is. So depending on what your business is, you'll want to have different details of line items so you can see where the business is coming from. So his total income for this period is $10,200, but you can see the majority of his income came from his landscaping service of $6,513, and he had a little bit of income coming in from pest control. So this kind of says, okay, this is what my income is, and I'm able to see where the majority of my income is coming from. So it helps you decide, am I in the right product lines? And you'll be able to look at that when you start looking at cost of goods sold, because you can get detail on that and say, okay, this product line is way more profitable. This product line is not profitable. So it kind of helps you look at that and make some decisions on what you want to be doing with your business. They have a fairly small cost of goods sold, so like 1,071. So in this particular example, they went out there and bought products that they were using for the business, and it was a little over $1,000. So his gross profit margin is 9,129. That's a very high gross profit margin for that level of business. So you can say, okay, wow, that's like, you know, 85, 90% profit margin. That's really good. So does that mean he's making all that money on the bottom line? Well, we have to take a look at his expenses. So if we go to the next page, you can see this is where he spent that money. So you can see he's got automobile expenses, and then he's got equipment rental. Wow, he's got insurance. So wow, he's got a lot of insurance expense for this business. So you can see that he went and he worked with somebody and said, I'm in this type of business. He needs to have lots of different insurance to protect himself, to protect his workers. So that's a large expense that he has to run that business. Then you can also see that they have particular job expenses. So he's costing out expenses here against particular line items of revenue. And then you can see there are legal and professional fees, accounting, bookkeeper, lawyer, all of those things are separated out. He's got maintenance expenses. He's got rent or lease. He's probably renting a space. So he's got, you know, rent that he's paying for. He's got utilities he's paying for. So even though he had a really good gross profit margin, you can see that his net income margin, I mean, it's certainly not bad. It's 1,696. So even though his revenue was over 10,000, at the end of the day, his income is a little over 1,600. So it kind of says to you, okay, then if this is what my revenue is, these are what my expenses are. Are my expenses in line with my revenue? So that's what I would be looking at this saying, are my expenses in line with my revenue? Does my revenue need to be higher? Am I charging enough for my services? And is there something I can do to mitigate my expenses, especially the insurance expense? So this is where it's important to then look at this and say, am I structured right in terms of my services, my pricing, and my expenses? Does anybody have any questions, I guess, specifically for like their business or what their business type is on an income statement?
So we had a question from Mel. She asked if we do married filed jointly and my husband is a full-time employee and I have a single member LLC and he helps on my business, can we write off business purchases or meals that are charged on his personal credit card?
Uh, okay, that's kind of a CPA thing, but are they just pleasure meals, just out and about, or are they truly business related meals? Like, are you talking business and it's like, you know,
Mel, you want to pop on and business related meals?
I mean, most people are gonna put that through as a business expense. Now, the thing is, if it's on his personal card, is he looking to get reimbursed on that, or how are you doing that? Because if the expense is on his personal card, that shouldn't be connected to your accounting records. So then are you looking to pay him for that, or are you looking to, how are you looking to handle that? Because like with with bookkeeping, you need to have a dual entry system. So if you want to,
She's looking at it for tax deductions.
right, but you need to get that expense in your records. So if that expense isn't feeding through to your business, you want to debit the expense, you want to create that meal expense in your business, but you need to have an offset. So are you looking to reimburse him for that out of the business, or are you just looking to like have an offset to owner's contribution? I mean, I see Sonia, is Sonia a CPA? Because she could, if she's a CPA, she could better answer this than me.
Most of CPA. I would definitely say probably something that you should consult your CPA with, Nancy.
Yeah, I mean, uh, as a bookkeeper and business consultant, I've seen it done a lot of different ways, and most people will put that through as a business expense. I can't give guidance on that, but I would say keep your receipts and do whatever you need to substantiate it, but that's where I would really talk with your tax preparer, with your CPA or your enrolled agent to make sure that you're doing it right. Because like, I get that you want it to be an expense, but if you want to get it in the books to reduce your taxable income, there's got to be an offset. So that would have to be an increase to owner's equity, which can definitely be done. I mean, it can definitely be done, especially if he's involved in the business. I mean, are most people here service businesses, or is anybody like got inventory and a more complex income statement? Services, yeah. Right. Service. Okay. Oh, so we do have inventory. I'm curious, and I appreciate everybody answering. What are you guys using for your bookkeeping software who are carrying inventory? QBO? Google, oh, Google Sheets, okay. So for the person who's using Google Sheets, are you using, I'm curious with Google Sheets, are you using then that information? Like, what accounting system are you using? Because even when you have Google Sheets and all that, that information still has to then get put together so you can get your tax prep done. You're still gonna need financial statements. Okay, yeah, Shopify, good. Great answers, everybody. I appreciate the interaction because seems like most people are using QuickBooks. I don't see anybody's using like Xero or FreshBooks or any of the other stuff out there. Very good. So Oh, wow. Meg, you can maybe get with me offline on the question you have. There's a question here about an option for inventory and QuickBooks Commerce. Yeah, that's kind of a mess. You can email me separately offline and I'll try to help you with that. That's the other thing, like for those of you who are like Shopify sites or doing e-commerce, e-commerce is so complicated. You really need to work with somebody. You'll figure out, how to manage that because there's a lot of different moving parts on that. A lot of moving parts. Well, if you'd like, we can move on to the balance sheet. Okay. Yeah. Okay, here's another comment that somebody wrote. Yes, e-commerce has been a mess, and it really is. It really is. Just, we'll get to the balance sheet, but like this actually impacts the balance sheet because there's so many different things going on. There's so many different platforms out there, right? So people are trying to invoice. There's different methods to invoice. You can invoice that in a QuickBooks file. You can invoice from a third-party app. If you're using Jobber, there's all different things that you can do for that. And then payment methods. People getting paid now, there's so many different payment methods. And the interesting thing is how it actually feeds into your bookkeeping records and into your balance sheet. So you can say, okay, my checking account here on the balance sheet has $2,101, but that money came in through so many different ways. You could be getting paid by cash, by check, by Cash App, by Zelle, by Venmo, by PayPal, by Amazon. There are so many different payment methods that people now have to accept to get paid, which makes it extra critical that when your bank feeds come in and you're getting information in to your bookkeeping records, that you're matching up all that information that's feeding in with all your different providers and you're reconciling that every month. It's just getting more and more involved. So any of you that are using all of that, just be really on top of it. So with the balance sheet, kind of like we talked about, your main accounts are going to be your checking, savings, accounts receivable. If you carry inventory, undeposited funds, that's kind of a tricky one that can kind of trip up people. Undeposited funds are basically monies that you've received as payments on receivables. So like, say you got 3 checks in from different clients, and those 3 checks equal $2,062. Well, you haven't actually physically either gone to the bank or taken a picture and deposited yet. So that's sitting in undeposited funds. When that money actually gets into the bank and gets deposited, then that money will come out of undeposited funds and go into your checking account. So undeposited funds is definitely a QuickBooks account that comes in the software, and that is important to manage with how you're receiving payments. That can definitely be something that trips people up. So I would just make a note of that. If you see undeposited funds on your balance sheet, just to make sure, because that money is technically supposed to be a wash account. You're supposed to have it come in and then have it go into the checking account and be as close to zero as possible. So happy to answer any questions on that. Fixed assets, but that's pretty explanatory. You have a truck. The original cost of the truck is $13,495. Over time, because that's a fixed asset, that truck will depreciate. The fun part of accounting is you then get to work with your tax preparer on what method of depreciation you're getting to choose for this. I won't get into the weeds on all that, but at some point that $13,495 will be going down every month in total value because the asset depreciates. And those are journal entries that are done at the end of the year. We won't get in those weeds right now. We can go on to the next page, which is the liabilities. There we go. Oh, we can go back one. There we go. So the liabilities, they're pretty self-explanatory. We have the accounts payable for the trade debt that we have on terms. We've got the credit cards out there. So it says at this point in time, I owe this much money on my MasterCard. It's really important to keep that current so you know exactly what you owe. And behind that number is going to be all the line items of all the stuff that you charged and everything that you've paid off. And then other current liabilities, in this particular example, you've got the loan payable of 4,000. You've got some other payables that would just be germane to this particular business. And then you've got a long-term note payable of 25,000. So obviously that 25,000 came in to help you fund the business. You have to repay it, so it's on there as a long-term note payable. And then in your equity section, you've got some net income that you're showing for this year, but as a whole, you've got negative retained earnings in the business. So you haven't been able to hold on to the money long-term yet. So the more income you can make and keep in the business, the better it'll be for a positive retained earnings. Any questions on the balance sheet? No? Okay. So we can probably go on to the last one, which is the cash flow statement. In my experience, the cash flow statement is the least understood and least looked at report, but it's equally important. So what this basically is doing is it's saying for this period of time, so we had income of like over $1,000 for this period of time that we saw on the income statement. So this statement, this cash flow statement, basically shows where the money came from that came in the business and where the money went out to, and how are we doing cash wise. So you can see, like, for this period of time, for the 10 months, we had net income of 1,696. And then I've got 3 different sections of where money came from and where it went. The first section is called the reconciling net income to net cash by operations. So operations is the bulk of your balance sheet. It's your AR, it's your AP, the money coming in, the money coming out on trade debt, your accounts receivable collection. And this is kind of like the bloodline of your business. This is like the money that's coming in and coming out every month. So am I making money from my operations? If you've got a negative number, it means typically like the money's going out. If you have a positive number, the money's coming in. So, you've got some money coming in the $4,000 in the loan payable. So obviously you've got a loan. But if your accounts receivable is a negative 5,281, that means that your receivables are growing. So you've got receivables. Receivables look good, but receivables aren't cash. And that's kind of a distinction I also want to make sure that people understand. Cash and income do not mean the same thing. And I know that may not always make sense, but cash is not the same as income. And that particularly is also derives on what type of accounting method you choose for your business. If you're doing cash method for your business or you're doing accrual. If you're like a cash and carry type business, you go to a store and you swipe your card, typically that's going to be a cash business. The money's coming in, the money's going out. You show your income based on what's literally there and what's literally going out. If you're an accrual-based business, if you're carrying receivables or payables, you are an accrual basis business. When you do your taxes and when you run your books, you are going to run your bookkeeping records on an accrual basis. So at any point in time, you'll know what your receivables are for what you've sold and what your payables are. The thing with that is and again, I don't want to get too much into the weeds, but it's the big picture of bookkeeping and accounting. It's the matching principle. You need to match revenue and expenses. So if you're on an accrual basis, which a lot of places are, typically like service providers will be, because you're providing a service and you give somebody 30-day terms. When you provide that service and you create that invoice, you're recognizing that revenue. So your income statement is going to show that revenue and say, hey man, this month I sold $5,000 worth of accounting services. So $5,000 is great. So I now have receivables for $5,000. So during the course of the month, I might get paid $1,000, so I have 4,000 in receivable. So my revenue is showing $5,000, but I only have $1,000 in cash. So I got paid for $1,000 of my receivables, so my receivables went down to 4. So even though my revenue looks great at 5,000, my cash is only, my revenue looks great at 5, my cash is only 1,000. So all those receivables will help once they get collected. So it's important to know that even though your income statement may look good, you really need to know what your cash flow statement's telling you in terms of where your cash is at, where it's going, and where it's staying. So in this particular case, you can see like the money that came in and money that was paid on trade debt. And then you can see that, they purchased the truck. And what did they use to help support the business? Well, that $25,000 note payable right there that we saw on the balance sheet. Well, there it is. It's right here in the note payable section of the financing activities. So this business over the 10 months of 2021 got a $25,000 note, and they took that money and they used that money to help pay for their operating expenses. It helped them buy the truck, and it helped them grow their business in terms of whether it's payroll, contractors, operating expenses, which is why they have good receivable. So when people say, oh, I need money to grow my business, I need working capital. When they say they need working capital money, that means they need money to keep their operations going, to grow their business, to keep the revenue going, to pay their trade debt, but they also need money to support them if their receivables are out there, which is why it's really important to stay on top of receivable collection. So that is, that's kind of a short explanation of the cash flow statement. I think it can be a little hard to understand because when you're looking at it, you're seeing like negatives and positives, but it's basically telling you where I'm getting long-term money from in my financing activities, where I'm investing that money in my investing activities, and on a daily, weekly basis, where am I using that money to fund my operations? So you can see that they had to borrow money to basically keep the business going for this period of time. I know that's kind of a lot of information. I'm happy to take any questions on the cash flow statement.
We don't have any questions, Nancy.
Oh, hopefully I didn't confuse everybody.
Actually, Tamara, she's got her hand up. You want to pop on?
Yes, so Nancy, if you made a key statement toward the end of that, and I didn't catch it all, really summarizing it, can you restate that concerning the cash flow? Because I was
Sure.
trying to make that note.
Oh, yeah, no, sure. So there are 3 main areas of the cash flow. The financing activities is showing more long-term money, where you're getting money from, and then what you're using that money for is your investing activity. So like in this case, the financing activities, they got long-term money in a note payable, and they use that money to help purchase a truck to support the business. So they use it in their investing activity. And the third part of the cash flow statement is kind of the daily to weekly operations of the business. So it's money that is provided by operations, whether it's receivables being collected, trade debt being paid, credit cards being paid, loans being paid back. That is kind of like the lifeblood of the business, is the cash by operations. That is the daily, weekly business that's going on. And I guess also I said, like with working capital, when we talk about, got my banker hat on here because I used to lend. So when people say, oh, I need working capital money, well, what does that mean? That means I need money to help support my ongoing operations, which is exactly, it could be payroll, it could be receivables, it could be short-term money to make a one-time purchase of products. Like say, hey, you know, especially right now, what's going on with like supply chain issues and issues of not being able to get product when you need it. There are companies that months ago said, okay, I need to be ready for Christmas, and I'm going to have to buy twice as much as I normally would buy and then store it, because I don't think I'm going to be able to get it in time to meet my Christmas, you know, my Christmas need. So earlier this year, they bought twice as much product as they normally would. So they had to probably either finance it somehow or ask their banker and say, hey, can I get an extra money on my line of credit or an extra advance to purchase my working capital, which means I need to buy inventory. I need short-term money to support my business. And then once I start selling that out and it's the holidays and I'm selling through all my product and I'm collecting on that, I'm collecting on those sales, that money then goes to pay down that loan. So it's for short-term need to help support your operations, and that's what a working capital loan is. And I will say, if you're going to be working and trying to get any type of financing, not just bank, but there's a lot of different financing options out there. There are micro lenders out there that do like $20,000 and less. There's online lending options out there from like Blue Vine Capital. There's just so many different, even QuickBooks, if you look there, they have QuickBooks Capital. I have a client that uses QuickBooks Capital loans. He's had 2 of them. PayPal does loans. So there's all this option to get these loans out there. But if you're going to look for any type of financing to support your business, you will have to provide them financial statements. They will absolutely want to see probably a business plan. They will absolutely want to see your income statement, your balance sheet, and more than likely a cash flow statement. So it's why it's really important to pick a bookkeeping software and to keep it current and to keep it reconciled, and so you can produce those reports. So I'm kind of curious for anybody out there who is like maybe using spreadsheets and may not be using a particular software. Have they tried to go out and get any type of financing? Like, what would they be able to produce for reports to try to get that financing approved if they don't have actual financial statements? I'd be curious if anybody tried to do that.
I don't see anything in the chat.
Well, Sonia wrote yes. So Sonia, does that mean that you tried to get financing?
Oh, she's saying.
Oh, yeah, all bank, yeah, exactly. And even like there's government programs out there. I forget the name of the micro lender out there, but there are programs out there that are especially geared towards women that are like $20,000, $15,000 and less. And you can fairly be a new startup and they will actually will do lending, but they're going to need financial statements. And more than likely too, they're going to need a personal guarantee. I don't know if everybody's familiar with that, but probably going to need you to produce your own personal financial statement and do a personal guarantee.
We have about 5 minutes left, Nancy.
Oh, okay. Yeah. Sonia just said, and some banks or lenders make you get a personal financial statement and have your CPA or bookkeeper sign it. I don't know a lot of bookkeepers that are going to sign those statements, though. That's a little dicey. I don't know too many that will sign that. I mean, a CPA, oh, see, that's tough too. That's a whole nother animal, trying to get certified financials or reviewed, or you're not going to need audited, but especially if you're a CPA and you have a license, you don't want to pierce that corporate veil. That can get dicey. I appreciate your input, Sonia. It's really good. I really want to thank everybody because I appreciate the input. I appreciate that. It's been interactive. No problem. I like that. That's my information if anybody wants to reach out. Oh, thanks. I kind of like what I do. My goal is to try to make sure people understand so they're empowered, so they have the information they need to be able to run their business. Information is key, and it may not always tell the story that you want, but having that information is empowering, and then you can make decisions on what you need to do with it.
Well, thank you, Nancy. We certainly do
sure.
appreciate you coming, and we'll turn it over to Tracy.
Thank you, Nancy. That was great and such valuable, as I said, information that it is everybody really needs. And we thank you for presenting tonight. I did want to.
Oh, you got muted.
You got muted.
You got muted.
Well, I did want to address the grant winners because there have been several asking questions about what they need to do for the second half of their funding. I sent that out before, but I'll send something tomorrow with more details or a spreadsheet. But much of what was talked about tonight could go into that, a business plan. And I want to we need a complete business plan, not the one-page business model canvas. And this has all been mentioned before. It's not anything new. Paid receipt for $2,500 or more. And you're going to need to total and tally these. And these receipts have to match what you total and tally. Every time we get them, they're usually a mess. So you make sure that you have that, and none of them include sales tax, which our funds cannot pay for. You will need 3 hours of small business advising. It can be SBA, it could be SCORE. We can help you just get busy with that. You have to finish the small business training course, which ends next Tuesday. So after next Tuesday, if you have all of those things submitted or ready to submit, then you can send that to us for the second half of your grant. But remember, we are getting really, really close to the Christmas season. So you want to be careful because then the school's going to be closed for part of that time. But I just wanted, again, to go over everything that you need and send it all at once. Don't send one and then another and then another. It makes a huge nightmare for us. So I will send you a sheet that you can start putting some of this in, but definitely with your receipt, make sure that they equal what you put on the piece of paper. And then you will get paid much quicker if you have that. So if there are any questions, let us know, but I'll send out a sheet tomorrow that will go over everything again that you need. So thank you, everyone. We know this was a long night, but it was a lot of valuable information. Thank you again, Nancy. Oh, and next week, what is it, Donna Lisa?
So next week we have the power of marketing with Brittany from BGD Marketing. So we're super excited about that. I did put Nancy's email in the chat. The replay and the slide deck will go out sometime tomorrow to everybody that's registered this evening. And then I thought I saw, when is the school closed? So they closed down over the holidays. So I think the 17th or that following week, they're closed until the 2nd or 3rd of January. So when it's closed down, none of your paperwork, none of that stuff gets processed. So do we have any more questions? All right, well, we thank you all for being here, and we will see everybody next week. Nancy, thank you so much.
I have a quick question.
Okay.
I didn't hear Miss Tracy speak at the end for whatever reason. I think some of our computers were muted from her voice, and I felt like I missed some key information. She sounded like she was speaking on some topics for a good 2 or 3 minutes, and I didn't hear any of it. Was there anything like super important that needs to be repeated that I might need to know?
Can you hear me now?
Oh, I still can't hear her. Okay. I might have to watch or listen to the replay. I'm not sure if other people can't hear her as well.
Yeah, we can hear her.
Okay. I think there was a couple of us that couldn't for some reason. I'm not sure
Yeah, I
why.
think
guess
there was
technical
one other.
difficulty.
Yeah, there was one other earlier that could hear on something else when I wasn't
Okay, that was
speaking
all.
either.
I'll watch the replay and see if I can get the information, unless I can hear Donna Lisa, but just not Tracy.
Donna Lisa, just tell her I will send out a spreadsheet tomorrow, but she will need her business plan, paid receipt, 2,500 or more, small business training course, and 3 hours of small business advising.
So she's gonna send out a spreadsheet tomorrow and you have to have your $2,500 in receipts, your
Paid
paid.
receipt.
paid receipts, your 3 hours of business coaching, your business plan. And what was the last one, Tracy? Attend all of the
These
training.
classes.
Yeah, the classes.
Okay, perfect. Thank you for the recap. Appreciate it.
Yep. And then Tracy, Chantel wants to know, when we receive the second half of the grant, will be other income if we're not able to use all of the income from 2021?
Oh, that's fine.
What if you have not used the money yet?
You won't get